And I also like the fact that I think there are some great triggers out there that could be something that really does push this market to the upside. That could be still technology, it could be financials, and it could be energy, or all three. So I do think that there is plenty of room for a move like that this year. It should be pretty interesting to see how it all plays out. But I got to tell you something. It's right now, when you look at the financials, they are cheaper in terms of the growth rate. They are cheaper and they're lower PE than the S&P 500. So if
This
you
is a
piece
fun
that
one to get
together,
into.
I'm sorry.
This is a fun one to get into today because they are getting hit right now.
Yeah.
A little bit of a pullback. I'm going to pull up XLF here, Pete, because I know that you've been watching these banks and you've been on that. Goldman Sachs, big move. Hans Albrecht, who's on the show, also was plugged into that. So I think that the bank coverage, while we've been on it, we could probably be on it even more because they had a really nice move. Is this a buying opportunity?
I think it will be, but I think we want to get through a little bit deeper of those earnings themselves. And obviously, this week is earnings week, right? I mean, we've got Citi, we got Wells Fargo, we got Goldman Sachs and Morgan Stanley still all in front
baby.
Thursday. So it's going to be a busy week of finances and financials, and it's going to be interesting. I think these investment banks, when I looked at the numbers, by the way, record revenue for JP Morgan, and yet and they beat on the earnings, they beat on the revenue, but people were a little bit more. They were more hung up on it, I think, on some of the investment banking side. Well, maybe it just slowed down towards the end of the year, which is, I think, what part of the reason why it turned out the way it has. But I look at that and I see equity trading up 40%, Oliver. That's a pretty monstrous number. I don't think we are really in that bad a shape on the financials. I think people are looking for an excuse to maybe take some off because of the fact that take a look at every one of those charts that you're putting up, whether it's Goldman or Morgan or JP Morgan or Citi.
I'm on JP Morgan. It crossed through its 50-day moving average, so it usually doesn't stay down there for too long.
No, and the bottom left to the upper right, as a good man used to always say about the financial world.
That's a trend.
And that's what you're looking at. Each one of these, when you pull it up, I mean, it's absolutely extraordinary, that move that they had last year. I think that move continues, and I still think IPOs are going to be big. I think M&A is going to continue to be very big and a lot of roll-ups and so forth. So I'm not overly worried about, and I think some of the pullbacks, if it gets back down to some of these certain levels, I think that would be a great buying opportunity.
All right. Goldman, if it goes the way JP Morgan went and it gets down to its 50-day moving average or below, that would mean 877 for Goldman Sachs. For some context right now, it's trading at 940. So it sounds like you're ready to scoop those up on dips. The other one I just want to bring up, since we're talking banks, is the regionals, Pete, KRE. Any interest in taking a combined financial plus small cap play all in one? Go for KRE. What do you think? You trading that? You dabble in that at all?
Yeah, once in a while, and I haven't recently, but not too long ago, I guess, we did see some option buying in there, very sizable option buying in there. I tend not to be as much of an ETF trader. I like to be far more onto, if it's possible, into individual names. But so there are certain regionals, sure, I like them. But we haven't seen the kind of option buying in specific names, but we've certainly seen it in the KRE. So something that I always keep in the back of my mind as I'm looking and I'm watching things play, as they go through the day. I still think that there are great opportunities out there in some of those names, just not all of them. So I'd go to the individual names. Plus, they move a lot quicker, oftentimes better beta, in other words, than you would find when you look at some of those ETFs like KRE.